Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to follow up on some analysis we were doing in our training webinar yesterday for MTPredictor customers. For this I'd like to start by looking at the ES, in particular how we had this rally up here in the ES into just after 10 o'clock, this high here. If I right mouse click, do Elliott wave intermediate, what we were looking at, or what I was commenting on, was how this was a nice 5-wave rally, and if the market then goes down or goes off a 5-wave sequence, the first target is normally the DP of the wave 4 low, which is what I've placed on here. Then what we teach next is if this DP is exceeded, which obviously it was exceeded fairly quickly, then the entire prior sequence, the entire prior 5-wave sequence is corrected. So we go back to the start of the 5-wave sequence, which actually started here where this TS3 buy setup was, but it started here the previous day. If I right mouse click there, put decision point on, you can see how the ES actually did do exactly that. It declined from the wave 5 high straight past the initial DP, but look where it stopped, right at this DP support we had on our charts in the training webinar yesterday. And this was put on the chart well before the market got down there, and this was an area that caught a corrective low before the market corrected back up again. If someone had been lucky enough to actually want to sell that high down to that low, that would have been a very nice almost 7-hour profit. So were there any other reasons why we're anticipating a high to come here in the early morning on yesterday? Well, if we look through the 15-minute charts, if I look at the YM, again what I was looking at in yesterday's webinar was if we went back to the last prior major peak, which was here, and I put a decision point, whoops, missed that, mouse is a little bit skitty today. If I put a decision point on from here, you can see how this actually projected this in advance. If I put the session times on, you can see how the market opened, went up to that level, and that actually projected the actual high of the day. So we caught the very high of the day on the YM. Just as before, the initial support zone would be the DP off the prior low, which is here, and you can see this did indeed catch a minor low before the market corrected, and then there was a sharp decline into trading a bit later, which I'll look at a bit later in the webinar. But just while we're here, the next prior pivot low is right back here. So if I put the DP on from here, you can see that this is where the YM eventually went down to and actually found support as of the low of the day, right at that projected support zone there. If we look at the ES, there wasn't anything obvious as of the high there, but support right on the bottom here again was where the low of the day came in. The NQ was amazing in that we actually had an automatic TS3 sell setup right at the high of the day, and if I place the analysis on, just look what happened. The NQ declined right from there, right down, and actually reached its first projected target, which is here, and if you traded that on a 15-minute basis, that would have been a 10-hour profit. So an absolutely amazing trade there. But the point being initially is that we were anticipating a high because of that automatic TS3 sell there. Same with the Russell Index. There's your TS3 sell, anticipating a high early in the day and the market declining nicely from there. So that's why we had a look at the ES, and particularly this wave 5 high, because 3 out of the 4 other markets were giving us 15-minute resistance in and around those zones as well. So larger degree resistance, therefore anticipating a decline. Just come back to the NQ very briefly. I've already said that we had a TS3 sell set up, therefore that set the larger degree trend to down in the early part of the day, in the morning. So when you come on to look at the 3-minute chart and you had this TS2 and TS3 buy setup, these will probably be avoided because they were against the large degree downtrend. So bear in mind now that we've actually said the large degree trend is down, were there any sell setups later in the day to take advantage of this? Yes, there were. If we look at the ES and I scroll forward, you can see here was our decision point support. The market went through that, so therefore confirmed the large degree trend was down. It then came up and had a couple of attempts here at some sell setups. If if I place the analysis on the last one, you see the market decline nicely. Now, as I've already indicated, because the 15-minute charts were indicating the large degree trend was continuing down into at least this large degree support zone, if you were trading the shorter term chart, you could have quite easily have trailed with the ATR stop, which means you'd have held this short trade into the close. So on the ES, that would have been a very nice 6-hour profit. Remember, we use correct position sizing, where we vary the number of lots, contracts or shares to keep our initial risk small and under control. In this case, 2% of a sample $20,000 account. So in this trade, it would have turned an initial risk of about $370 into a profit of just over $2,300. So a very good trade there as well. The YM, exactly the same position, in that the market had an initial rally off this this DP support, came up, but then retraced back down through, confirmed the large degree trend was down, made another correction up into the about 1445, 1500, so about 3 o'clock. Just before the 3 o'clock zone is the area I'd like to look at on the YM. So just to remember, broken down below 15-minute DP support, trend is now confirmed as down, minor correction back up into about 3 o'clock, then the market goes down into the larger degree support zone right down in the bottom. So trend is very much down into that large degree support zone. And if we look at the YM and scroll forward, this is the area here I was looking at. So it went down below the 15-minute support, came back up again into our about 3 o'clock zone here. So this would have been a very good sell to take. It was also a standard MTPredictor trade setup because the STF was red, but the point I wanted to stress is because the larger degree 15-minute support zone was not down into here. In fact, if I just change it to a 15-minute chart and I put that DP on there, then go back to a 3-minute chart, you can see there's your 15-minute support zone drawn on your 3-minute chart. So knowing that this 15-minute support zone was still a long way below the market, again, as I suggested with the ES, you could have trailed with the ATR stop. That would have held you in, held you in, held you in, and you'd have probably come out at either on close or perhaps start to trail at the bar lows. Would have even been better as you enter the 15-minute support zone. So that would have been an even better thing to do, is knowing you're at a 15-minute support zone, knowing you're only a short time away from the close, you're sitting on approximately 9-hour profit. So just trail at the bar highs. A very, very good trade strategy that will be. So this was an absolutely amazing trade on the YM later on that turned an initial risk of approximately $350, again using correct position sizing, into a profit of approximately $3,300, or a 9R profit, or 9 times initial risk. So this is a good example yesterday of how MTPredictor can be used, particularly when you set the larger degree support zones on your 15-minute chart. So in this particular circumstance, when we were talking about the markets earlier in the day, we knew that there was going to be larger degree resistance, therefore the trend was going to be down. That actually allowed us to catch the wave 5 high on the ES pretty much early in the day, which has nailed the very high of the day. But then more importantly, as the markets came down and bounced off this 15-minute support, the trend could have been changing to up, but that wasn't confirmed because the market then came back down, broke down below these 15-minute DP resistance again, which confirmed the trend is down. Therefore these sells later on the day at around 3 o'clock time into the, again, the large degree support zone down here were very good trades to take, and as we've already seen, the YM would have produced a very good result there. So that's a good training example today of how to use the larger degree support and resistance zones on the 15-minute chart to gauge the larger degree trend. That will help then not only orient your shorter term 3 and 5-minute trades on your shorter term charts, but also will help with the trade management, particularly when you get a trade like this that you may want to run past the initial target and look to run a bit further into large degree support and resistance. As you can see, the result can be very, very good indeed when you do that.